March 8, year 2019. Goodwill on business purchasing. Goodwill for business when you actually buy a new companies or when you wanted to invest in business, often you may have to purchase corporations and businesses or companies or sometimes even shell companies. The company might have values to the goodwill, and the goodwills are actually tested for the impairment test on a year-to-year basis by the management of the corporations. And so the management of the corporation have the responsibility to test the goodwill on a year-to-year basis to make sure that the goodwill has not impaired, and if it has impaired, it has to be recognized on the accounting statements. It is goodwill because of the nature of the two types of assets: A, tangible assets, and B is intangible assets. And goodwill is an intangible asset that cannot be touched, that cannot depreciate in value because it cannot depreciate. Therefore, it cannot be amortized, but the value of the goodwill might change as a result of that. Whether they have to figure it out whether the value of the goodwill has been changed on a year-to-year basis, and that has to be recognized on the accounting statements. So when you buy a business, you have to make sure that you're not paying too much and you're paying too less for the goodwill. And if you do pay, if you pay higher value than the market value of the goodwill, then you may have to address it you may have to address that in a very different. You have to take the accounting approach to reflect that on your accounting statement. And again, you would have to. The goodwill is something that it really often you don't really deal with the much in a financial planning side of it, but it's an accounting side of it. But again, one thing that we should be very careful of is that the goodwill often it is confusing. It has the impairment test, but it has never been amortized. Okay, and that is something that you would have to take a look into it. And this is Mijanur. Thank you very much for listening.